Ladies and gentlemen, you're now tuned into Cryptopocalypse Now live stream. I am your humble host, Crypto Ranger. Shh. The title of today's video is Stealth Trading. Now, it's not just a title or clickbait. You may have noticed that there was no notification in Discord. This time around, I did not go and tag everyone using the everyone tag to let them know, not only the platoon, but market spies, and especially the non-committed people that lurk in the shadows. I just want to see how many have a notification bell on this channel. I'm preparing for my next giveaway. I want to see the loyalty of my legion. It's also a Saturday, so I'm doing a little experiment. I want to see how many people are wide awake on a Saturday morning. Don't want to trade markets on the weekend. We're also going to be talking about some fun stuff that you should know about regarding order books and all that jazz. And what stealth trading really means. So we're starting off quiet. We're not going to be as hype as before. We have no intro video to entertain. Nobody knows that this stream is live, unless the few of you who are watching will go out and tweet it, Facebook it, or share it with their friends so more can join. But I wanted to quickly talk about how how this whole setup here, the pit, the desk, the office, the pool, the whole platoon pad in all of its glory, is actually a format that I have chosen to present videos that otherwise would, in most other cases, for the majority of YouTubers, they would record it, edit it, make it look perfect, do 100 takes before they publish it, and present something that looks very romantic. I like this raw feeling of our streams where whatever's being said is forever recorded. You can go back and take a look. But something's got to give, and that is time. But I look at it this way, from my perspective as a, nowadays, might as well refer to yours truly as a content creator. This is what we're doing right now, creating content. So in my opinion, it's the same thing as a YouTuber going out there, recording a video, make sure it's perfect, uses up all their time to edit it, publish it, to get the point across. And that takes about 3 to 4 to 6 hours editing. I mean, we here on this channel are doing this editing thing live. So every cut, every scene, every little thing that you see. For example, shout out to all the latest people who have subscribed. Thank you so much. This is all programmed live. And I think it's really exciting to be able to share that kind of excitement and energy for the streams with you, the viewer. And this is not only for the platoon or the spies, this is just in general for people who'd like to rediscover trading, if I may say so myself. Rediscover trading. And in today's stream, since it's Saturday, it's not an official work day, allow me to just freestyle it. And whatever comes to our mind here, we will share it. And we'll make it be a part of this stream. And so if you're up for that, I invite you to just kick back, put on your flip-flops, grab some water, coffee, and just relax. And enjoy the fun. Because looking at charts shouldn't be a frustrating experience. Looking at charts should be something that you look forward to every day. Because there's a story in every candle. And there are ruses and riddles that we can ponder and muse upon. And that's always exciting. Cracking the case here. Bloody murder. Liquidations. And just looking at MarketSpy, trying to figure out like what the next setup is. Today there was a trade here, right here at the top. Couple of exciting points. And so I'd like to share my perspective of a session, if you will. So we're going to talk about how the process is usually, what it's comprised of, what we do specifically to find a trade and then execute on it, and then how to manage it in the process. So this thing could last, I'm looking at like 6+ hours maybe. I don't know. I've watched a couple of other streams and no one's complaining. 6, 7, 8 hours I've seen streams that, you know, people are gaming or trading the whole session through and there are no complaints. No one's asking for a 15-minute video. And so today's video is going to be a little stealthy, a little discreet, and it's related to the subject matter where we're going to take a look at how levels are formed and how order books play a role in shaping those levels, and how certain parties out there, the liquidity providers, the market makers, even if Bybit says we don't counter trade our customers, they have contracts with liquidity providers that do. They can see right through the book and see where you are. And we're going to talk about how that relates to sizing and your balance, because they can see your balance. That's not counter trading. That's selling information to the third party liquidity provider. Telling them this guy has a balance of 2 Bitcoins. Currently he's leveraged this much at this level. All of that gets thrown in the mix and a strategy is born, a winning strategy for them, where you are the guinea pig. And we're going to be using stealth and the concept of being invisible, disappearing from the spotlight, and how that is tied to risk management as well, and how you can blend in and move together with the order flow without sticking out like a sore thumb. So, information gatherers, intelligence gatherers, market spies, I invite you to spend some time with me today live, or this video is being broadcast through YouTube, so it means it's automatically recorded. You can come back to it later. But we're going to have some fun today, ladies and gentlemen. Good morning of Tarsus, Clifton Lewis. Thank you, Maros. And Alex for real. Good evening, Clever. Good to see you here. Bybit Pro has now the smart feature where it bugs you by your API key expiry date. That's pretty amazing. I can't count the many times when, previous versions updating, reloading, changing VPN addresses, moving, traveling, and you always have to update APIs. And you just never know when it's gonna hit you, Now I know in 6 days it's game over. So on this account, we have to reload this baby, create new pair of keys to keep the little engine running. That's really amazing the way it's set up, and I like how it creates that ping gradient at the top because of it. I'm just gonna keep it for now, just to show it off. And another smart feature brought to you by Transgenic and the Cryptopocalypse Now team. Hmm. 17 viewers. For me, if I look at the average of viewers, I think I'm surprised by the number because you have found your way here on your own. Nobody had to ping you on Discord and say, by the way, excuse me, I'm going live. Would you like to join? You got the notification bell. You got your YouTube app going, ting, 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 ting. And you're sharing it with others. I like it. And I really appreciate it. Thank you guys. This is how it should be. It's the default. But I've been spoiling my viewers little by little. Nobody provides service on the same level that we do. Breakfast served. The chart is yours for the taking. Now, speaking of the chart, they all have personalities, okay? And these personalities can rub on you. So sometimes the chart is beautiful, you're mesmerized. Sometimes it's ugly, terrifying, and you want to run away from it, stay away from it, not touch it. And sometimes it's just plain annoying. Plain annoying like it is right now, where I think I see a setup, but the 2 wicks, double-edged sword over here, up and down, don't make any sense. And we're at the tip of the squeeze. We're gonna look at some of the classical technical analysis patterns here. And we're gonna try to figure out if they're actually, are they worth trading? Should they be, if we have a strong trend, does it even matter? If you have lines or whatever, the momentum is the kind of thing that just carries you through. Whatever you draw on your chart, the momentum will carry it through all that. But all we can do is do our best, right? And this is analyzing. The title of the video is Stealth Trading. So we're not trading yet. We're going to analyze the chart. This is my session. I'm going to sit down, I'm going to take a look at it, and I'm going to make a decision whether to get a position open at a level or start scalping, depending on what the chart is telling me. I've had a small trade on a signal over here. And now we'll try to see if there's another one setting up and see if we can do a series of them, like 1, 2, 3, 4, 5 back to back. Find a little scalps, maybe $200 up, down, if the volatility allows us to have that kind of luxury, and we'll take advantage of it. And in the middle of it all, we'll kind of sandwich the idea of stealth trading in between all that in practical terms and examples. Okay. Let's go mix up our cappuccinos and come right back to it. What do you say? Yes. Good morning, good evening, and good night, wherever you are. You can see how this looks like a pattern here. We're closing. See that volatility? Bounce away from a key level. Expect it. Chop zone trades might as well be these tiny little candles that you can trade. Since the last stream, nothing's really changed. We're still at the same price level exactly where we were yesterday. There's a consolidation. Are we gonna have a leg higher? In my opinion, the momentum is looking really strong, but I think we'll need to wait 2 more hours and seeing how. Just by volume analysis, I can see how the selling has begun. Okay, we're gonna have a couple of candles that are gonna long the top by the dips, but I think it's gonna fall. There are a couple of things that are happening right now that the market is looking at. First of all, they think 42.5 was the clearance for resistance, and this was the first retest, so we had a major bounce just now on that retest. In most cases, when the market is this promising, this bullish, these levels can be played for a little long setup like this, where you get to capture $500 to $1,000 moves pretty easily, right? But a classical pattern like this, which tells us that if supported by momentum, we see price falling out of this wedge, then we have officially topped out. We'll call it a triple top. You may not see it right now, but there's a tiny little neckline right here. Call it a head and shoulder, which can bring the price down to about this level. And this little bounce here, $1,000, means nothing. It's not a failed sort of dip that we're going. What am I doing with it? Am I trading it? No, I'm just watching it. Now, because this is a classical, first of all, I don't have any indicators on here. Just price action, right? We're going to first consider all possible outcomes and settle with one based on probability and say evidence that we can collect from this chart and shape our understanding about where do we go from here. First thing I do is when I have an established pattern like this, it looks very obvious that we just had a retest and now we're going to slowly start bleeding out. There are many divergences here, but long-term trend flow is looking healthy. However, I think this price falls below the close of 43,200. If it closes lower, then we go lower. We go into this blue box. And the first key area of interest will be marked right here at the bottom of the box. So again, if you guys don't know what the stream is about, please rewind back to the very beginning and catch up with the first 5-10 minutes of the stream and what we talked about there, and it'll make sense. Okay, so now that I have this orange line over here, right? I'm not rushing in. First thing I can tell you right now, there's no urgency that's noticeable deep within. The mind is empty. The mind is clear. The stomach is empty. The stomach is clear. There's nothing but water in there. Be like water, my friend. So this price bounced away from the top. It's very rare when we come down and retest the tip of the iceberg. That's just, it doesn't make any sense. It's not support. It's not resistance. We flipped it, but we actually flipped it a little earlier before. So the number one thing that we know from trading charts is that when you have a consolidation area breakout, we have a middle area of it. We split these consolidations into two chunks, the upper half and the lower half, where there were plenty of stops above and plenty of stops below that remain. Now the above ones, people who shorted this, they're taken care of. People who are long here, the market thinks that I could let them take profit here, or I could take my time consolidating and then drop rapidly, which I think is what the case is going to be. But not yet, not immediately, not like we're gonna go post a red candle here and go for these lows. So the apex of the breakout, where the candle start, we may as well look at this open of the candle here at 4,500 and say that this was the point of this consolidation where the market kind of sprinted away from here and started running up. So it is natural to assume that we will come back to here. These are the ancient rules of the market and trading that tell you that these are the points of interest that you come back to. Now, why is it not here if the liquidity technically here or here where the stops are? Since we're only looking at bodies, we will assume that we could produce a wick that can overlap this area and go lower, consolidate a little bit, and then come back to this point and actually go above it. I'm sorry, I can't listen to vocals. They put ideas in my head. When I listen to music, it has to be instrumental. I've all my life never songs that had lyrics. I just don't get it. I don't get lots of great songs out there, artists that pour their hearts and souls into songs, and songwriting is just amazing, mind-blowing, poetic. But all the songs are putting that individual's ideas into my head, and those people feel connected with the universe, and they feel like everyone else is. No, it's not true. Some of us are just like so disconnected from the common. Yeah, you know what I mean. Anyways, let's not talk about music right now, but I'm just saying, no lyrical content, please. Make any sense. Everything changes by the minute. There's nothing that's timeless about lyrics. Okay? Arguable, I know. Gonna piss off a lot of people, but it's not a music review channel, okay? This is trading, and we need a clear, focused music. Now, since we already have me singing here, it only makes sense that we just listen to some instrumental stuff. But anyways, so this is the key point of interest. It does not mean that we're looking to place a single limit order in here and hope that we can snipe the bottom and have a bounce reversal from here. It comes a little challenge right now, and that is Bitcoin is known to not respect pullbacks. I believe that this was a pullback. This was a pullback, and we just had this as a pullback. I think next time Bitcoin goes down here, it'll bounce, but we can't expect that it will bounce like this, like in traditional markets, all right? We're talking about crypto here. And let's just think about this for a second. If the majority of people that trade these markets are they're great learners, right? They have studied every paper, every case, every book. They've read everything. YouTube videos, they paid for courses. And there are some courses that are great. I'm not gonna lie, you should probably look into some of those. They took finance, whatever may be the case, you know. And they're trying to apply this now, and it still doesn't work. Engineers with degrees, quant traders, you know, who are formulating stuff, strings of numbers and stuff that doesn't make any sense. And they're still struggling, trying to figure out what the market is. And that's because they're trying to look data, right? Information will never beat the mystery of human behavior, the whys and the whats about humans and how we think. How, you know, the brain is the ultimate weapon. And what you see on the charts are emotional states of the all-knowing, all-seeing brain of every trader out there. And somewhere in the middle of it, there's a fine line where the genius trades and a complete irresponsible gambler tries to make money. It's the yin and yang that mixes in and produces that fine line that you need to find where the price will actually go based on these participants' expected outcome, what they individually think is going to happen, but most likely won't. You already know that Wall Street takes the most brilliant people out there and makes them look like complete idiots when it comes to trading. So you have teams of people working to solve one problem. And that is trying to understand, or in simple terms, predict what the market will do next. And some of them think that because looking at on-chain data somehow gives them an edge. Many people don't understand on-chain, and so there's a lot of incentive for people to go out there and sell it. That data, which is right there, it's available. It's just like the company collects it all. It's all free, but you just don't have the damn time. So you go and you buy a package and subscribe for $2,000 a month to get access to like the whole blockchain ecosystem, right? And they give you some charts to go with it so you can take a look at it. And essentially, you're still looking at the same thing. Bitcoin dominance, transactions, whales moving. You have no idea what those people are up to. But we're looking for patterns in that information. As we filter through all that noise, there are a couple of gems in there, all right? For example, in our Discord, some traders, they share whale wallet movements. So when a whale moves a portion of their holdings, that could be a significant event that could cause the market to react. It's a whale, the ripple effect, you know. It'll create a little splash in the ocean. So having said that, why is it that these people that look at these charts can't come to a universal agreement, and as soon as they do, the market will do the complete opposite? So this is where we come to learn about the word edge. You know, something that only the select few understand and have access to, or they have been taught. Things have been shared with them, and it's not as widespread because why? And so those select few, they look at charts a little differently, all right? Now, as soon as somebody goes and proclaims that I'm a contrarian trader, and I take pride in that, they lose their license to trade. What we used to say, they lose their license to trade. That's like Buddha coming along and saying, I'm enlightened, you're not. Or Jesus comes along and says, I'm special, but you're not. And so as soon as they say that, the enlightenment, the knowledge, enlightenment means knowing. That knowing is out the window. Now you don't know anything. You're back to square one. As soon as you say that I know, you're done. You don't know. So there was this guy in China a long time ago, vicious fella, Confucius. And he said, to know is to know that to know is not to know. And that is the framework that I think is most beneficial to traders when approaching these charts and markets. Any sort of conviction, confidence, fear, greed will lead you astray. But if you say that you understand the concept of to know is to know that to know is not to know, then you're kind of neutral. And the only question remains after that statement is, doesn't matter what I'm going to trade and how I'm going to trade it. What matters is, if I'm wrong, is there a way out of this? Will the market punish me? Will I lose this battle? Will I leave with a scratch and nothing more? Will I be completely destroyed in the process and never be able to trade or do this again ever? Or am I going to use tactics, humility, learn the concepts of staying in the shadows, understand that what other traders are seeing, the market already considered that and came up with a plan. That is a countermeasure to that ultimate universal expectation. Now, probabilities are things that, for example, I don't know, the outcome where the majority of votes, right, like just like on MarketSpy, the algorithm, the majority of votes are in favor, and these votes are actually coming from people that mean business and can make a difference, not just some random votes, right, but like purposeful, meaningful votes. So we have thousands of different indicators, but few of them actually make sense, and the rest of them are the exact same copy of one another. Doesn't matter how you cut it. There are thousands of copies of RSI that are named something else. So that doesn't really matter. But when you have a confluence situation where, you know, the majority agree, and that cannot be people, because we don't see them, we don't talk to them, we don't know what they're up to. But people have learned from books and classical trading styles of the late 20th century traders out there, and some of them that are still here, still kicking it. All this shit, the mind is not as sharp, and they're convinced that that is the only way, while everything else is evolving, advancing. Tools, techniques. So we find ourselves with this very tough question of, you know, what do I do? What do I follow? And how do I do it? So what you do is you analyze the charts, and we're going to do an example of how it all comes together. Then you also understand who you are as a person and what your tendencies are. Are you impulsive? Are you slack? Are you progressive? Are you convinced in your own ways? Do you yield? Do you pave the way? Do you lead? Do you follow? Now, following and leading is irrelevant here. We're not talking about a revolution here. We're simply talking about finding an edge within your own behavioral patterns in relation to the market. And once you understand that edge, you trade it. Once you have it, you have it. Everything else becomes management, risk. Any company in the world today will face only a handful of problems, and it all comes down to management. Managing the situation. Pilot knows how to fly a plane, but when there's a situation when the plane just is unresponsive, your skills are out the window. Now you have to figure out how to calm down, how to calm everyone else down around you, and what to do. Now you have some training, but sometimes you have to think outside of the box. And the market is the place where we think outside of the box. And because of that, we can increase our probabilities because we're looking at things from a number of angles, and we settle with one that is backed by the majority of votes that is coming from a system like MarketSpy, for example, or any other edge that you have that can confirm, reaffirm, and give you that strong confluence to make that decision that you can then proceed to manage and end up with a favorable outcome from all of that. So a classical pattern like this that is showing you that we have broken down, but it's not as obvious. Just like any bounce or a retest that is not obvious, we see retests like this, right? It's obvious, but a retest in the market could be this. And you're like, where was the retest? Are we not going to retest now? No. This was the retest. And it's not obvious. You don't see it. It was a slow peek my head above the level. No sellers. All right, proceed. Slowly start creeping up the page. Then, late realization. Some point in the middle of this candle, people realize, oh snap, it's a breakout. Because they couldn't realize that down here. They pile onto it, pile in, and it goes up. All right. Then we see no buyers. It starts consolidating. And some people are coming in. They're like, yeah, it's still good. It's still good. They start buying it. Top buyers. And then we have bears who are now terrified because it was such a stupidly powerful bounce that they're like, I don't know. But everyone universally right now, everywhere across the whole space is looking at this rising wedge. So what do? We know that volatility will not allow you to place a stop here. Sometimes you're lucky and you might. And let's take a look at that distance. 1,000. If I were to go and trade this wedge right now, and I'm not using wicks or Japanese candles here that don't make any sense geometrically. I mean, look at them. They're the ugliest thing ever. At least you can use like these. These are much better, right? The bars, much better. But then this is the standard and that's what everyone is looking at. So automatically, you have to assume if the majority of people are, there are a select few that are looking at bars, line charts, Kagi, and others. Baseline retracements, right? Point and figure, whatever. Very select few. And the reason they do that is because it maybe is what they're used to and how they would trade at their firm or, wherever they learn their craft. The art of trading, not science. And artistically, they prefer those. But that gives them an advantage because they're shaped. When you draw your lines, which are very flat, these candles here have wicks, needles, and square bodies. And as you start zooming in, they start looking more meaningful. This might as well be a 1-minute chart, and it could change like this. But because the candles are now spread out wide, thick, and just humongous and cover like 45% of your screen, you're thinking maybe there's a trade setup here. But there isn't, because these candles are insignificant in their form and shape that they take. So we use it just to adhere to some of the notion that, people think, if I understand this, I should be trading it. Remember, nobody wants to experiment. The only crazy people that experiment are scientists, breakthrough researchers and others that are curious what happens. Maybe there's a different way. Most people will just keep hitting the same wall without realizing that you can go around it. You don't have to keep banging your head against an obstacle. You just walk around it. But that takes balls. And ladies, no offense, but these days, some of you have more balls than men. So you should understand what I'm talking about. It takes balls to actually experiment and try something new. People are very comfortable being comfortable. And when you step into uncharted waters and you find something new, it works, but you'll never find out because you just cannot overcome yourself to try that. Why? You're convinced that if you keep trying, one day you'll get better. Instead of looking for a shortcut, finding something that can actually benefit you. And I hope that today's information is going to be that beneficial piece that you're going to meditate on and think about the next time you're looking at the charts. So we're talking about how traders are looking at these candles and there's no perfect way of drawing them. I use a line chart to get rid of the noise. Simple answer to a very simple problem. Do you connect the wicks as levels? Do you look at the bodies? I think the close and the open of the candle is all that matters. And since line chart is just a close of the candle, every bent period over here on the line chart. Every time there's a little imperfection, that's a close of the candle. And it's the same as the open, the close and the open. So opened, closed, next candle, opened, closed, opened, closed, open, closed. So what is one and the same coin, the same story. Okay, now that we know that, take a look at the detailed view of this line chart versus this. Now, for some, you may be saying, well, what if it's not? What if it's not this perfect thingy over here, right? We're looking at the close of this pulsating dot. We go lower than this neckline, where we find a little bit of support right here. Okay, and it is likely that we will find ourselves bending below this line, below 43. In the coming days, maybe hours, I don't know. But before we do that, we will chop around. So we progress, we move along, and we say, okay, we have identified a pattern, and we decided to use the line chart to draw it. Now we're sitting here and saying, well, if this is the high, this is the close, why don't we move this here? What does that make it? That make it a breakout and a retest currently. Basically. Right? And you're like, oh, wow. There's a wick over here. Look, connect the wick. Not touching the line chart. Then this is a retest. But a retest does not happen at this angle. A retest happens like this, and it goes lower. Something like that. That's just an age-old observation. Just like the Chinese when they talked about the meridians in your body. You know, pain points. Kung Fu. When they watched the animals, the crane, the snake, they sat there and observed the movement of a rock that was below their feet. Yes, there was movement, even though it's a rock, but they were sitting there and watching it, and they reached their realization. That was recorded, passed on along, and people realized, well, yeah, there's a certain behavior to snakes and cranes that we can mimic. Look at cars. They all have faces. If you look from the front of the car, there's a face. People and their dogs, usually the owner looks exactly like their dog, or the dog looks exactly like the owner. It's just an evolutionary thing. And every single martial art is based on the movement of animals, because humans are not naturally designed to move like that, but they took that from them. They mimicked and copied, and they realized that is the way of the water, the way of the wind, the way of the fire, the way of the praying mantis. So we look at this and we say, hold on a second. Since we can draw this any way we like, what is the proper way? What is the correct way? How would the professionals do this? The professionals would do it like this. Okay? A visual representation of what's to come, because they're simply looking at the lows and the corresponding close of the candle. Hence, we have come to establish and record the trading Bible that tells us about the close and the open of the candle that form higher highs, higher lows, and so on. A harmonic pattern. Now here's the thing. We're looking at 1 hour. We're working our way through, right? We're looking at this with passion, with excitement, and we're dissecting it because this is what we like to do. We don't want a quick answer. The majority of people want a quick answer. They are yet to lose more money before they realize there's only one way. And that's a way of dedicating yourself and committing to the art of of trading. So look at this. Let's create this pattern right now. Let's create it like this and say, okay, looks like a breakdown and a retest, and we should be going lower down to the orange line here. Why? Because we talked about that this is the point of rupture. This is where this volcano was born, out of this compression. So we're back to compression because that's a very highly liquid traded area, right? All these other candles, they're just, they're showing demand. And when we consolidate, there's lack of demand. But no selling has taken place yet. The market is deciding. So it has the time to decide, so do we. We don't chase any of these setups. They're there. Eventually, once we figure it out, they're there. And we only need to know the direction that can last a little while, giving us time to open and close a trade directionally in profit. So notice how this is connected artistically, not scientifically. Okay, CR says line chart is better. Ignore the wicks. Yet here he's using the wicks. But that's just how the thing is set up. We're using this high versus this high. Here there's a wick, so we have a balance of things. We have some sort of hybrid here where the wicks and the bodies make sense. And that lines up. And if it lines up, we have a pattern. Otherwise, how would we recognize a pattern if it wasn't there? So our job is to create a pattern or find a pattern, no matter what it takes. Bodies, wicks. But here we're smoothing out the price action, and we're approximately saying that, look, since we're closing below that level now, the top, as a matter of fact, doesn't really matter because the trend line is measuring us going up. And there's no, why would we have this thing? This was just invented to show you that we're squeezing, but we don't need this line to really see. This is just this is a sort of like a trading view thing for other people to make a point. But we always have these supporting trend lines. And once we start going down, we always have resistance lines. And that's all. There's no need to, like, for example, if here, is it a channel? Is it a, what if I wanted it to like draw it over here? Would that be correct? Is that a triangle? Actually, in the video of triangles, I had a section where it said, is that a triangle? And we talked about how, yeah, this is a triangle. It's not going to look exactly like the triangle that you have, the picturesque, picture perfect triangle that you have in your mind. But the point is 3 points of contact from the right direction. So downtrend, do we have 3 points? 1, 2, 3, 4. We have a hell of a lot of points of contact here. Okay, done. Got to be a triangle there because it's descending, it's going down. And we don't really need to have a triangle from below. We don't need that bouncy, perfect, textbook style trend line, because when that breaks, that squeeze pattern, we can see that volatility is dying. It's dying off. It was huge here, got smaller here, and we're compressing and get smaller, smaller, smaller until the next impulse. But we know that we're following a grind line here, and currently we're trending. I don't care about the top, that it's not perfect. Now, if you know about the concept of vortexes, you will also know that there's something that's going on here that looks like a vortex. Now, this is something that we talked about briefly. There are other tools to use for it. It's not really a line. I'll show you. There's a better way of doing this. But let's agree universally that this is over. What if it shoots above it? Hold on a second. The what ifs don't really matter. What matters here is that we're expecting, if this is a breakdown, this to go lower. What do we know about volume? When a sell candle backed by full powerful volume happens at the top, then the probabilities increase. Take a little sheet of paper and a pencil and put an X on it. Don't write anything next to it. Don't label it, just put an X. And I want you to get up to 7 X's on the sheet of paper. You don't need to remember which one it was, but number 1, breakdown. 1 X. Okay, 1 point, whatever. Now we need to find confluence and find supporting evidence that this breakdown is indeed happening. And what is possible here? Is it possible that it's going to grind up against it and then go above it and then take off higher? We'll find out in a moment. This is the forensics work that we need to do, because just like you watch that movie Dexter, you know, the maniac serial killer that goes around slashing, killing people, chopping their heads off. Only the bad guys, of course. But you can't just call that guy on the scene and tell him, do the blood splatter analysis. He's gonna be there for days, hours, you know, looking at the scene, trying to visualize it, trying to like move things around, say blood came, you know, shooting from this direction and then it ended up there. No, wait a minute, let's rearrange, let's change the model and see all the angles and possibilities. And eventually, when you have that vote of confidence, indicators telling you yes, 7 times in a row, green light. You have reached the maximum peak of probabilities for a trade setup that is directional. And the only thing that you have to do now is execute on it and measure your risk and ask one question. What if I'm wrong? Despite all that work, you're not attached to your outcome and you're not saying this is the Dexter doesn't go, like that's the killer. You cannot press charges unless you have evidence that is very tangible, right? Not circumstantial. It has to be not just because it was there, so I took the trade because I saw a signal. I took the trade because there was a breakdown. That's a circumstance of the moment. But you need evidence, tangible evidence, to perform the analysis and actually call it and say, we have a trade setup, I have a trade setup, I'm gonna act on it. And if there are pieces missing, you're not sure, you'll have doubt, your risk appetite has to reflect that. That means you cannot put a lot on it. Your bet is small. Like 20% sure. That's reflected on your risk profile for your account. Moving along, let's digest this together. So, okay. Calling it short here, even though momentum is thick and everything is looking pretty strong over here, what gives? Why would it go down? It just bounced by $1,000 over here. I don't know. We have 1x knowing that it broke down. Counter yourself right away and say, did it really break down? Good question. Now look, let's look at the behavior of time frames. Perfect, right? Everything is just nice and snug. Let's switch this over to 4 hours. We need to move the line. Guys, it's not perfect. It's not nice and snug. Let me just adjust this a little bit to the 4-hour time frame. 4-hour time frame is more important. Just breaking out, but haven't officially closed, and we've got 2 hours to go until the close. So until then, this can easily go back inside and continue rising. Now I'm having second thoughts about my first confirmed X that we have a confluence point, like number 1, what we're looking at. Okay, you say, let's double it. Let's go to 8 hours. And now we have to move this a little closer. And now it's looking like a freaking parabola, like nothing but straight lines. Now you're thinking, okay, let's get rid of this. You're thinking to yourself, okay, what if these lines, what if I get rid of them? And what if what we're looking at here is this? Expanding channel. Okay, forget about this low. Since this is a higher low, let's do something like this. What if we're looking at like something like this? So you start experimenting, you're like, oh man, that's ugly. I don't like the way this doesn't even look like a base. Okay. Don't like it. Why? What's wrong with it? Why don't you like it? Well, you know, so far, 6 hours, you know, if we're under here, there's some sort of resistance here, right? Right? I don't know. Let's take an extended line. And the extended line. Now let's go connect this peak to where we are right now. And see if we have confluence over here. Anything that would give us nothing. You know? What if I move this like that? There's still space. But this is a line chart. Let's flip over to candles and see that we have failed to break above that confluence line. These line up perfectly. But this one, not so much. Although, we're still in the green and there's a chance that we will break out. This certainly shows a little space right here. And so we can expect, based on this, another space here. So it's a mirrored image. Eventually, price must make its way up to here. Will it be from this point, or will it be a consolidation? Will it go down first and then do that? Because we already had one over here, this gap, so we might as well just do another gap over here. Might as well. Why not? Okay. We're getting lost, you tell to yourself. You're like, I'm getting off track. That doesn't make any sense. I like my original line on 1 hour. So the next question that comes to your mind is, am I trading this for an intraday into tomorrow? Because it can dip by like 1,000 and 500. It just one candle just jumping by 1,000. So if it dips, I'm gonna get like 3,000 points down to this orange line. Am I? From here to here, if it dips? Yeah, about there. So you're thinking, that's a good risk to reward. So if I get in here, put a stop here, and expect it to go all the way down here, you can see that's a good risk to reward ratio. You don't need to use this, but if you have to, absolutely. You look at this and you say, here's my stop. Here's my, oh, it's just like Tone Vase and the Twitter gang. Finally, I can like take a screenshot of this and tweet it and say, look at my trade. I took this trade. We'll come back to the trend line in a second. But let's say you're convinced and this is falling and you're like, the more it's falling, the bigger the risk. So I got to get in now before the risk increases. And of course, you can't just throw a field number in here and say, I want to go with I want to go with 50,000 contracts. You can't do that. Now you have to deal with risk. And you have to say, from here to here, I have 1,185. The distance is right there. So since there's no other way to put a stop loss and you're convinced that this is going down, and you think we can't have another candle that goes up like this and then comes back down, and you're convinced, let's just say, but you don't want to be burned by this mistake if it doesn't materialize. So you assess your risk and you say, is it really worth it? So you bring your mouse over here and you see that the high was at 44,570. That's a suspicious number there. But you go to your limit tab. And clear these out. Just 100, just so you can calculate the risk that's involved. And you say, I'm going to put my stop loss, right, when I get filled on this executed order. And what was it? The high was 44,570. There you go, 44,570. That's your stop. And you use the risk pane because it's the only way to do this. 44,570 gives you a distance to stop loss of 1,164. And you're risking 1% of your account, but that doesn't really matter. You're like, 1%. I have 100%, so I have 100 tries to be profitable or lose money. So here you say, okay, 1% would be, you're looking at the actual loss. Now, between you and the exchange, you'll sign a contract. As soon as you open this position, there will be money involved, real money, your money on the line, and Bybit will be sitting there, you know, trying to clench their teeth in the hopes that you'll get liquidated or get hit by a stop. And they're hoping that you're not a subscriber to Cryptopocalypse Now channel, because if you are, you're not fun to them. But you're trading in the shadows with stealth. You're trying to blend in and not stick out, because remember, when they sell your account information to third parties, we have to assume the worst. This is not an allegation. But let's say they do, and they know exactly where your balance is, your liquidation point is, your all that is, it's an AI that calculates it all, and they know you're in the group of traders that are similar. So they're like 1 Bitcoiners, 2 Bitcoiners, 3 Bitcoiners, and you're in that basket, in that trade. They know exactly what to do there with you. So you end up giving it all back to them. They know your gains, your losses, your history, everything. Okay, let's assume that they're out to get you, because being paranoid never hurts. We're not talking about losing sleep over this. We're just talking about playing this right. So here, you're convinced. Remember, the trend line, that business analysis, we'll come back to it. But let's say you just don't have the time for it. You're like, yeah. Once we analyze, we can just put the risk pane aside for a little bit, because we will have a hedging way to go short or long, depending on the setup, without really, we'll kind of like do the calculations in our mind, because the account is not that big. So you don't really have to count every penny. You know, for $1 million accounts, that will make a big difference. Every 50 cents of price movement will make a big difference to the bottom line. But for smaller accounts, you can just kind of practice until you know it like the back of your hand, and you can approximately understand like what the risks are. But for this example, we're going to be doing it the proper way, and we'll look at this and say, I'll sign the contract between myself and Bybit and grant them the permission to take this much money that I agreed upon and not more. I'm not going to use their shit interface. I'm not going to use the liquidity, the leverage slider. I'm not going to be looking at my liquidation price. I know that anything I do on that platform will result in me losing money. So instead, I'm going to do it properly, because I stayed late night with CR during one of his streams, and I learned a thing or two. And now I'm going to actually not think in terms of like, by the way, 1% gang. 1% gang. Every day you should have at least 1% 1%. And that's under 1x leverage trades. Anyways, you're thinking risk percentage. Risk percentage, you realize at this point that your loss if stopped out is $500. 1%. Daily earning, 1%, $500. But this account is kind of fat. By my standards, if you're doing 1%, you're in the top 1% of traders. You can hit that consistency. Whenever you trade, you end up with 1%. Like 99% of the time, you're top of the line. It's not about the numbers. It's about the reality. According to your book. This is the reality according to my book. Looking at this wallet balance and doing the calculations this way. So for me, 500, I'm not willing to, because if I lose this 500, the next time I trade, I will have higher risk and I'll need to put up more of my margin up to come up with the same 500 to break even. So I'll be risking more to break even. And if I wanted to make up for the loss and actually come out in profit as originally intended, I would have to risk twice as much. The leverage goes up, first mistake, it starts from there. Automatically it starts from there. When you get smashed on that stop loss, based on the field. Now I'm telling you, on the field over here, if we're going down, we're saying that the risk to reward ratio here is pretty strong. Okay? There's no support here except this line over here at 4,500. There's nothing else that can hold this price. Basically, we'll probably go lower once we confirm our analysis here. But we're not doing the analysis now. We're just saying, like, look, if it goes up, and I don't want to average out. That's not my style. CR averages out. He doesn't use a stop loss most of the time. I'm not on that level yet. I want to have a stop loss. But I'm warning you, stop loss will make you work twice as hard if it gets hit. Now, the most important point here is, what's the take profit price? And you look at this, not the wick, but right here. Don't be greedy. 4,600. 4,600. Now we have information here that tells us that the risk to reward ratio is 2.42. Pretty standard. The trade is small and is going to be a pain in the ass because it's going to take a long time to get there. And it's going to go up, down, up, down, up, down. And the whole time you will have a stop loss here. So you should not care, because you can throw this on here, go to Ethereum, go to Amazon, Apple, whatever the hell, and do the same thing over there. And if all of them are assessed correctly, each one of these taking about 2 hours of your time. So that's an 8-hour shift. And you do it right, tomorrow you come back, you get paid. Some of them will hit the stop loss, others will pay you. Well, that's work. Trading is not a shortcut to anything. It's just do it right, you can replace your job with it. But it's not gonna start buying you Lambos if you don't follow through with this. I take it you already know that, dear viewer. The platoon, our traders, they're in sync. I'm referring to the people that are just peeking from the shadows, curious. The traders that have been, I have been trading for a long time, bro, And no, you haven't. There's no need to boast. And if you were smashed before by the market, you would know that by now. But you still continue to act up with your ego all over the place. Because that's a vulnerability. You feel vulnerable. You've lost a lot. So you go around telling people like, trading is easy. Look at this. Look at my risk to reward. It's not. Trust me, it's not. You can lie to me, to others. Don't lie to yourself. Don't do this to yourself. Anyways, let's keep it moving. So $500, I don't care about the percent of my account. 1%, I don't care about it. $500 in my eyes, that's like, I'm okay. Like I want to make that, but I don't want to lose that, because if I lose that, like I said, twice the work. So no, I am not going to trade 17,000 contracts based on my entry, my take profit and stop loss. Bybit Pro is my personal, is the lawyer between myself and Bybit.com. And this Bybit Pro risk pane tells me that yes or no, I agree or I disagree. It's the witness, it's the notary office right here. Okay? And we're about to make it official. So we don't like this. It's telling me 16,000 contracts, and this is the outcome. Are you down for that? We'll take 500 from you if you lose. We'll give you 1,000 if you win. 2-to-1. No. Now the risk to reward ratio does not change. What does change is now you're going to go in here and you're going to say, I'm only willing to lose maximum $50. So the law is 0.01 now, because 500, 1 decimal down, $50, 0.1% of your account is what you're willing to lose. Okay? We're not talking about 1x, we're not talking about anything at all. So you can make $100 in a couple of hours when this thing dips all the way down here, or wake up to it tomorrow and start your day with $100, you know, and look for another scalp. Or you could just skip this trade if it seems like it's not worth pursuing. But I think, you know, we've been killing it daily gains. I might as well risk $50 for this trade, because it's going to add up and it's going to give me a good ground to stand on psychologically, because you're not starting your day red. Never trade in the red. Got hit with a stop loss, walk away. Done. That's it for today. You did something wrong. There's no way that you get hit on a stop loss and right after that you can make a good decision, make a trade. It just doesn't work that way. You don't know, you're not understanding something. You got hit on a stop loss. That means your assessment was off. What makes you think that moments later suddenly you're like, oh, I get it now, I know what to do? No, you're gonna make mistake number 2 and make another bad trade. So yeah, I want to start with $100 when I wake up tomorrow morning. All right, so what does it take? Well, it takes 1,667 contracts. What do you mean? What do you mean? You mean to tell me that I can't trade like CryptoFace with $1 million position?
Yeah, how about even 50,000?
Hey, individual choices, but I'm just telling you. You see, by practicing this for a couple of months, you'll put yourself in the framework of someone who's a good money manager. For yourself. You don't have to pay nobody. You don't have to look for anything. You're just gonna do it for yourself, all right? So that trading, that muscle memory, this thing, a few boring months that is going to shape you and build you, and then you can start increasing the size once you understand how all the cogs and wheels move in the machine. Now it'll just click and you'll be like, okay, I know when to increase my size, and we'll get to that point. This is a starting point for this particular trade that we may not even take, but this is the measurement. We don't have to take profit here. We can hold it lower. Or all the way through here, we'll recalculate and add to it and see what changes, how the stop loss moves down, by how many points, and how you can increase that position size if things start looking favorable. Anything may happen tomorrow. This thing may like completely collapse and retrace all the way back down to 20K. Hey, this one, you'll hold it. Now we'll employ trailing techniques to trail it. We'll use, we'll measure volatility and say like how far back can it spike and which stops will it eat. And your original profit area target is $100, all right? But we're gonna throw that in there as it consolidates in this region, does its thing. We're gonna go ahead and say, there. So we'll click this button right here. I'm used to like copy pasting it. So you select something in Bybit Pro, hold Control and then C on your keyboard. It's going to paste it, and then you go over here, Control and V. Copy it, and then it's gonna paste it here with Control V. But you click Fill, and boom, your quantity is there. So this is the amount. Limit take profit is set. Move stop loss to 44,570 is set. Risk is understood. This contract is ready to be signed. Loss, I accept the $50 penalty if my assessment is wrong, and then we're going to take out this high. Yes, I'm okay. By the way, there's a chance that it will take this out. So, but we're showing you like how to protect your assets. And so once everything is filled in, ready to go, leverage needed below 1. So it doesn't really matter. It's not like leverage you could borrow it and like throw it in there and say, I put more leverage on my trade. If you throw in like contracts like this, leverage needed, the quantity the quantity will change basically. If you put like 300%, you need 103 leverage, but then you're able to trade with $500,000 contracts. Pretty nice. We're not doing that, but you can see how that percentage increases your leverage, and it's not up to you where you're gonna slide it, how much you're gonna use. It's not up to you. Bybit Pro tells you what is good here. Okay, now our job is to go and get a fill on this trade and go short. And done. We have 1,700 contracts that is going to yield $108 once we hit the profit target area here. And now it doesn't matter. Once the contract is signed, once your order is through, it went to the book. Now listen, no one saw this, no one noticed this, no one's interested in it. It's not showing up on radars. This is pure stealth, right? This is well calculated, and these guys are going to notice you, but they're not going to attack you because they can't. It doesn't make any sense. There's no way to squeeze you out of this position, but the only risk you're facing is the stop loss. And if you do that, your daily winnings should like mitigate that risk of hitting a stop loss every once in a while. Now, why are we doing this? Because we have not completed our analysis, but we want to be a participant in the market. We want to be moving in a speculative direction, controlling our risk. At the same time, we'll switch back to the chart right now, complete an analysis, and then look to take a bigger trade once we have the complete package. Right now, on the whim, just like that, looking at the wick, and it's like, yeah, right? You have to calculate your risk, and you have to agree what it is that you're willing to lose. I'm not willing to lose more than $50 on this. Screw them, right? And for those people who are trading like 50,000 contracts, they go market buy, boom, $50 in fees gone, right? Automatically. So for people who trade with market orders, they have no need to, unless it's breaking out and you're on the verge. You're right there in the moment, right? You can chase it with a market order and a counter limit trade within a $200 distance, taking advantage of that volatility. So that is how you calculate risk. Now back to reality. We're going to talk about the trend lines and what it really means, because now we're seeing it all. 1 hour makes sense, you know, perfect alignment point from here to here, beautiful, from here to here, not so much. And this is where we are right now, and the market is thinking, what is this? What are traders doing? Do I go back inside? If you go back inside, you just move this and say, I was wrong. It was not actually time. It will actually go higher first and then break down. We'll come back and add more X's to our assessment here and see if things line up and if we're on the right track, or are we being a little impatient and getting in on a bad trade early? Is it even worth it considering shorting here at this point or not? But in case it is, and the first X is correct, we already have a small position that's going to take care of that problem, the FOMO problem. So we don't have to worry about that. It's already set. Let's take a break. I need to go drain the lizard. I apologize. Coffee?
Ah, that felt good. I'm back, ladies and gentlemen. I am back.
Like I said, raw and uncut. You don't believe me? Think we're gonna edit this? Huh? Never. As is, every setup, every video is real. Why would I mute it? We don't mute. All right, so let's get back to the chart. And now that the lizard is drained, well trained to sit for extended periods of time, but every once in a while just loses patience and says, you know what? I've had enough. Ladies and gentlemen, it was just one of those moments I had to. Absolutely. $2K Tank Clarky, welcome to the stream. Get used to it. Get used to it. President of the internet. Are you really? Because I have a couple of requests. A couple of YouTube channels that you need to take care of and kill them off. Wipe them from the internet before more people get damaged. But if you are, let me know. Welcome to the stream. Second, we have to confirm the momentum here. The momentum. Now, the volume analysis here is suggesting that this candle was very important, and it looks, well, let's not get into it. Volume analysis video for those of you who are curious. The platoon, you guys already know what this means. And also, what this means, the counter top, faded candle at the top here. Those are pretty significant. On MarketSpy, we have very important information here. And it's funny because they talk about how the bigger time frames will ultimately influence the lower time frames, the smaller time frames. They're the dominant time frames. But I don't think they realize that it starts on the smaller time frames, and by the time you see it on the bigger time frame, when it comes to indicators, I mean, when it comes not just pure price action, but indicators, you see it on a bigger time frame. The smaller time frames were the ones that influence the information on a big time frame. So for example, here we'll see a very gradual decline and a shift in momentum potentially, right? And this will be reflected in price action. But when you look at the 4-hour chart, 6-hour chart, you will often find one of those sudden, huge single candles that go all the way down. And you're wondering like, but it didn't warn me. The 4-hour daily 1 hour is not gonna warn you and slowly start moving together with the indicator. It will happen on lower time frames, the ones that you're taught not to trust, the ones that you're taught contain noise. I don't think there's such a thing as noise. There's always valuable information. It's just, it's quantity versus quality. That's the question there, right? But what you end up with is essentially information that occurs on lower time frames. They get transferred over to higher time frames. And by the time you get a signal on a higher time frame, it is time for a reversal. Okay, there will be no continuation signal. Daily in price action behavior, price action traders need at least 3 candles to confirm a trend. So if the price action specialists are currently looking at the daily trend, and when they see 1, 2, 3, that's their confirmation. We were buying and longing here. We didn't need 3 candles for a confirmation. By the time the 3 candles occurred, we took profit at around here. We're done. We knew like this was a trade for us. Okay, and it made a good distance away from the average price over here, all the way up to here. Great. But we also see that in many instances, when you have 3 consecutive candles, that sometimes that is a confirmation signal, which unfortunately results in a reversal. So you have an immediate drop that comes following through. The market knows that people are looking at these because these strategies and the knowledge base about how to trade the market and the common patterns is so widespread that it's sort of expected and priced in. I mean, models are built on that, knowing that a new beginner trader would go and finish the book by Michael Douglas. The alien wave people, right? They will look at it and say, okay, this is what we're doing here. And the market knows that. So it doesn't really matter when it comes to what kind of technical analysis you employ. Is it pattern recognitions, premonitions, visions, or whatever? Everything is priced in, and you should know that. So here we're looking at the same problem that we had. Okay, we're looking at this trend, and we're saying, you know, is it really a trend? Then you come back down here, and you look at this trend, and you say, okay, well, what about this one here? It broke down. Yeah, you see how long it took it to actually go and complete it. But that was a bigger play here, and that was real. This one kind of small. It's kind of small. It could be there, but then at the same time, it may not even be there at all. Now we're using price line, and again, depending on what time frame you're looking at, it's all going to look different from time frame to time frame. We have also heard and seen many things about fake outs. When we see that potentially when price starts to range, you know, and has a breakout, we should confirm it by volume. Now the volume certainly looks quite dominating here, and the breakout volume as well. And the counter volume here is just trying to tell us that, you know, traders still are trying to defend this level. They know that if it's a pattern and it's going to push the price lower, then yeah. Are we going to find sellers or buyers in this area? And that's another question. You know, are there willing participants that are ignoring this setup and are saying pretend it's not there, and any dip is a buying opportunity because I think the price is going higher? If that's the state of the market, then well, we have taken care of that potential mishap, and we throw a stop loss at our on the only place that we can go and put a stop loss on. Now there's also a valuable ATR measurement, but that increases your risk. And because we're playing small and we're still analyzing, we're not going to use that because it's not a final trade or a position. The demonstration of how you should look at these things from a variety of angles. So keep this in mind. Corrective wave potentially to 4050, 4500. Okay. Now we're going to look at DSR and other indicators, and we're going to turn this into candles. Why? Just so we can see better. No other reason. So here we talked about how we have the potential to go for R1 max, and I'll be looking for to start building a major short position around this level. Eyes closed, I would probably go short at around this region. Now a couple of things here. We can draw all we want, but I can tell you right now that the breakout point occurred at this yellow line right here, which is the previous closing price of the month. We opened here, the white line right over here. The close was here. We opened at the close and lower over here, and we made a jump, and we're now trading above the previous month's close, which is signaling a reversal overall. So that's why we haven't really been talking about shorts, at least not yet. But suppose we are now going to make our way all the way up to here. Like I said in the last night's stream, we will overextend. And I look at it by, you know, in terms of speed. If you can imagine that this candle can, if it can shoot by at least one daily ATR instantly, one daily candle, and the next candle open will likely push the price down immediately, because we'll deviate far from the 200 and the 50 EMAs over here. There's another threat that's coming up, and that's a crossover on the 12-hour chart. Let's activate DSR on this side. And I believe that we will trend and continue to chop with a very strong bias up, as long as we're the 50 trends below the 200. Once we have that cross, that's when we can think about shorting and actually start positioning ourselves right before that close for the ultimate short over here. Now this is just something that is irrelevant in terms of like what pattern you're looking at. It's just going to happen because this cross will represent the cross of price in the 50 over here. So I'll mark it with a highlighter right here. This candle right here will be projected by the delay of these indicators on the cross over here. When that happens, this bullish cross will signal a reversal back down to this level. But we still have this idea that there's a potential that will revisit the lower Ks in the next 2 months or so. 30 Ks. Lower 40 Ks and higher 30 Ks. And this is something that I'm watching here because I know that delayed reaction is going to give me that ultimate reversal there. So until then, we're not really looking at this pattern. So when I find myself in a situation like this, I'm not really rushing into it because it's a fresh high, okay, for the time being. The last and we just opened the month, right? So we kind of started trending at the end of July, and we opened bullish, and here we are. So this cannot really end immediately. So going short immediately so soon after we had a little pullback over here and we wanted to be long, and where we got in long over here last time in our stream, this is still ongoing, and I believe that the range of the CPR here on the monthly chart is what's going to keep us chopping here. So I want to get as close as possible to R1 before I pull the trigger and say it is now time to start hedging or building a position against the market, but not here. So what is it then that makes us be invisible to market makers and the liquidity providers and the information that's available on us from Bybit? That Bybit probably deals with, to provides that information to others. I think when we were trading somewhere at the peak of this rise right here, there are a lot of traders who wanted to buy. Now, they're not wrong. If they bought it here, they're still in profit, but could have gone both ways. We said that we want to have a better deal would be retesting the lows here. We come back and retest it, and then we can buy here. That's a better deal. So in the same manner, I believe that when we have a short setup, it is good to, because of the nature of the market and how it happens, it is good to look and see where could that, so the overall trend here, monthly reversal, open, CPR above weekly, the overall trend is up, and that means the momentum is up. Now, the momentum does not mean we go up infinitely. It just means that overall, the market is inclined to go up eventually in this time period that we're in right now. And there's not going to be there's going to be a soft reversal, but not a hard reversal, kind of like a failed attempt to go higher. So in this case, we're looking for a pullback, but instead of participating in that pullback, we can be better prepared to find an area that we can go long at. Okay, find an area where there's enough liquidity for it to actually reverse and continue in the direction of the trend. People say the trend is your friend. I think this is exactly how you should interpret it, is that you don't chase candles, but you treat consolidations and pullbacks as opportunities to buy in. We already talked about that. So instead of timing the short here, is this the top? Maybe it's the top of this progression here, but if it pulls back, we definitely know that there's going to be, like, first of all, this yellow line here, we'll come back to it eventually, right here. Is it going to hold? That's a whole different story. But what we do know is that we're going to have at least a consolidation and a bounce away from this level, most likely. And that is going to give you an opportunity to easily capture $1,000, $2,000 move when the price starts to decline, and you will represent the second wave of buyers that are waiting right now to get in on pullback. Now, a lot of people don't believe in pullbacks, but I think there's no reason not to treat a trend directionally as it's established itself to be quite bullish at the moment. So any pullback, we have to assume that those will be bought. And if not, we're buying deep enough for us to not worry about a reversal. If we don't have a strong bounce, then we can clearly say that the market is not willing to, and it's actually topped out and wants to go lower. So because we take profit based on ATR values and not levels, so if levels we can buy and sell at, but we don't really hold to reach certain levels. But we can always count on ATR values to give us perfectly timed exits as well as entries if necessary, but mostly exits. So when that happens, when this pullback occurs, instead of timing the top, I would actually look at it and say, okay, we have a short coming up, but that's not really a short. It means that we're going to be pulling back and we're looking for an area to go long. And in this case, I am pretty sure that between this orange line and TC is what we're looking at right here. Now that's going to take a little while. You have to kind of see that this 50 MA is going to hold it, going to come down, go higher, and this is going to progress a little bit. And by the time it dips, boom, it will be right there, overshoot and bounce away. So that's a perfect buying opportunity. So this is what it means to stay patient and watch from the shadows. Now remember, once you put an order in, it kind of sits right there in the books and you're out in the open, and especially if you're trading size or you're being heavy on leverage, then you just gave them that information and you gave them your plan. I believe that most of the time, except in rare occasions, but most of the time, that we should execute trades right as they happen. So for example, sometimes when there's an obvious level and price gets near it, it's tempting to just like throw an order, go to sleep, and try and snipe a bottom or a top for a swing position and then hold it for a few days. Maybe tempting to do so, but I like to do it when I set an alert on price. When price gets near the level, I get alerted. And now I'm actually watching a couple of things: volume, momentum on MSX. So for example, if we're not in the green, we dip down, but we're not in the green and it's turning to red, you know, I'll think twice about buying that level. Long-term trend flow starts bleeding out and goes to red, for example, like this. I don't know if I want to buy this level here. I don't know if I want to buy this level. I don't know if I'll buy this green dot over here. I'll start thinking about it and not really rush into that decision, even though my projection says, okay, this is the area where we start building. So it's a key area of interest that I want to be a part of, but it doesn't mean I'm betting the farm on it and saying that, you know what, this is where I am looking to buy. On this particular chart setup, it's not as clear. There are times and periods when we have those setups and we get in on those. But in this particular example, there isn't. Because the drop can go deeper than you imagine, and the top can be higher than what it is now. And that's not always at every level. It's only once we've progressed enough. Two things. Momentum is so strong that it can easily wave us up one more time. And we're going to look at MSX and see if that's likely to happen or not. And the second thing is, if we didn't have a decent pullback, then you know that one is in the books. It's coming. Timing it is not important, but when that pullback happens, look at the price history and chart of Bitcoin, you know that those pullbacks, especially significant ones, will most likely bottom out, go sideways, or instantly reverse. But they will reverse, all of them. And that pullback will usually collect more. So when price starts dropping, why is it sometimes we see this? Like it starts dropping and we think, oh, it's going to retest like this level, but it actually starts going lower. And you're like, yeah, but aren't there like buyers here or stop losses? Like why are they not being triggered? And the reason that happens is because the depth of books are spread out where you have bigger orders sitting at the bottom. And when price seeks liquidity, it doesn't just bounce off away. That's why pullbacks don't work, and some people don't trust them, because the first area on the chart where we'll be like right here, it will likely not hold the price. It will actually go lower because there's not enough stop losses and liquidity, because this is the last batch of people jumping in. It's easy to eat them up. What about guys that are sitting over here holding like heavier major positions? Maybe they've been adding to them and they averaged it out to about here, 34. Why not make it go down there and find this level as immediate support and also a liquidity pool that you can tap into, where you can find more strength to go up away from. Yeah, that makes sense, but that takes forever. And we want to have at least to have one trade a day. So for people who have been looking at this, for example, so directionally, you know, you're inside of a wedge, and you're likely to go up consolidation, one more leg. And we always talk about this. If you're part of this channel, you know that once we have a leg, we don't immediately pull back down. We do a 45-degree greed candle style. We call them greed candles, where we have people that are just like, they're refusing to believe that it's over, but they still want to, and they will push the price higher, making it seem like it's not over. And everyone gets invested around these levels at the last minute. So yeah, it starts to go 45 degree like this, higher, 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 and then we have this thing. It takes out this level, takes out this level, while it bounces away from it, and posts the next setup. But okay, if that's expected, we want to look at momentum today. Since this period and consolidation was relatively easy to trade, we had a couple of trades. So we had reversal pyramids right here in the dragon skin. We have the second one immediately right here, and both of these yielded pretty favorable results, about $1,000 trade points. And generally, to make your 1%, you only need like a fraction of that, like 400 points or thereabouts, you know, with 0.5 leverage or so. Be a little higher if you go with like 0.2, 600, you know. to get that return. And those are the couple of signals that you have here with the trend line, purple line intact. But now we're starting to see some conflict of interest here between signals. The momentum is dying. It's the kind of place that you let the market resolve itself, let it decide, let it tell you what it wants to do, but you don't do anything in the meantime. But you had those trades, and these trades are strategic trades that we have described of why they happen and how to treat them. But yeah, it is overextended a little bit, and anything that goes up is not impressive anymore to me. I think it needs a pausing period. Are we gonna get that? Now this bounce over here looks to me like it came here to take out all the stops, which it did, and this candle also took out all the stops here, which it did. I think going to come up to here and go back down, and this is the trading range here until it is no longer the case, until we clear this area now. So middle of nowhere, stops here. People getting in on this candle right now are putting stops here, and just like what we did, we put stops right here. There's no other way. The market knows this. It will continue to compress, and then we'll have a move from here. But we have our wedge, we have a rise, and the probabilities of this topping out are greater now at this point. Even if the market goes a little higher, it is likely to come to a stop pretty soon. Water time. clever long boat, because this is not a typical stream. Like I said in the beginning, we're not doing a MarketSpy tutorial or anything like that. Trying to get a point across about trading in general. The title of the stream is Betting with Stealth. So that's the whole theme here. There's no MEXC. I'm not looking at MEXC. We're looking at another little pump here. 1 hour. Max 7, you guys know how to do that. Look for that for your intraday charts and trade setups. But she's not done for now. There is no Max 7 anywhere. It's getting close. It's getting close. For one to step. Not there yet. Go back to the trend lines. So once you have that established, you look at momentum and confirm it. And right now, on momentum, we don't really have a strong confirmation. And a classical trade setup would be where price goes up, gets rejected, and goes back down. Right now, we're not seeing that rejection. Most importantly, all of these setups that you see on textbooks, they're all done on a daily chart. And the reason is because, first of all, lower time frames are a pain in the ass to teach and explain to beginner traders. So most authors don't even bother. Second of all those books were written in the days where volatility was not that great. Look at the historical price data for equities and indices. You will see that things are pretty stable until they're not. You know, once in a while shakeout event, but overall it's a creeper, page creeper. Bitcoin is a little different. And yeah, so drawing these things on lower time frames that can change anytime, you're flipping a coin most of the time, unless you confirm it, like I said, with an indicator. Scalpers need to be a real patient risk-on person to scalp. Need lots of confidence, and certainly doing it on lower time frames is a natural thing, since you can't really scalp on higher time frames, although the higher time frames tell you directional setups. So, two things right now that I'm personally looking to establish here is, are we topping out or not? Now, we're seeing a crossover here on 2 hours, and it doesn't really matter what time frame, but I see a crossover here, which means now this will need to expand a little bit, but I think we still have more upside here before we come down and start our regression here. So with that, there's no immediate trade setup. You can throw one in and you can sit on it, knowing that it's going to take time and you'll probably spend some time underwater before coming out in profit. But right now we're fresh off this pump over here, and the market has not come down. It will not come down immediately. We're not doing anything, Radosh. Hello and welcome. Not looking at anything. We're just talking about general trading, trying to help newer traders to understand what goes on in the markets and how to blend in with price action, understanding the psychology here, understanding conflict of interest with Bybit, promoters, liquidity providers, market makers, and what does that make you? And we're looking at how I would assess, slowly, come to a conclusion. We're looking at a crime scene. We're doing some forensics right now to try to understand what transpired and what's next. We're trying to find the culprit here and press charges with a number of contracts to trade directionally. We talked about risk, and you guys are just jumping in. I recommend watching the first 10 minutes of the trade. 10 minutes of the trade, and that's going to give you a summary of what this stream is all about. It's just a Saturday night chill out session, nothing official. That's what we're doing. We're not really looking for a setup right now. There is no setup. Sound should be okay. I'm looking at my the volume bars here. They look decent. They look pretty good. But it's definitely not the same energy. We're a little bit chillaxed today. But yeah, these are the kind of things that you need to keep in mind. Reverb. Let me see. 1, 2, 3. Test. 1, 2, 1, 2, 1, 2. Testing 1, 2. Test. Okay, should be better now. I don't know why my setup always has this reverb. I don't know. Should be okay now. Streams from the future. It is expected that the technology we employ doesn't perform as expected. We're a little bit ahead of time here with these streams, aren't we? If you notice some bugs in this live multi-million-dollar production, then let me know. We can fix it on the fly. Teamwork, platoon. I'm not looking at these divergences at all right now. At all. But I see that one is setting up. Now, 12 hour, we had our first L. It's far from over. Little pull back down and I'll be buying it, obviously, like right here, the orange line. So even if it looks like it's going to pull back down, we'll buy it right there. We'll start accumulating lower if we must. But timing it right now doesn't really matter unless we get a signal short setup right now. We're seeing some weakening here on price action, but we're not seeing a definitive like go short signal, you know. Baselines are still intact. It's gonna take some time, you know, until we see some red. You know, once you start seeing red like this, you know, signals that telling you that we're losing momentum here, you know. First attempt, second attempt, you know, the first red area is gonna leave a little patch over here. Gonna go up, gonna go down, gonna go up. So we're gonna have a second L over here, and then we might consider short. Like I said, it's going to be up to R2 over here. And that R1, sorry, on the monthly. That's a 46 minimum. You know. So if you're still long from here, hold on to it. If you're not and you took profit over here as advised, you can go short. Where's your stop? Right here. All right, ATR band. Okay, right here. Risk increases. Fine, you're gonna lose more. If you want to go long, where's your stop? This wick right here. Demand. But then it shows like this candle over here has more volume, and it probably marked the top, and it's a strong indication of a topping out. So if you go long, your stop is here, and it'll probably do this and then this and then this and come right back up here over the weekend. And then what? The choice is very easy, but sometimes you have to tell yourself that, look, there is no trade. It's not about how good or bad you are, or what's your stop. That's the only question you have to answer. And how much are you willing to lose? And then go at it. But as for the signal, we're not seeing any signals. MarketSpy shows us strength. It's not showing us any weakness yet. And volatility right now, we just had this little candle that's $1,000 candle. What do you want to do with that information? I don't know. For me, I want to step back. I had my dragon skin pyramid play. Pyramid reversal happened on the 15th. Bam, right here. We know that we're expecting this price action to just go 45 degrees up within this wedge. After the breakout, obviously it's not going to just come down. So boom, entry here, boom, entry here. Hell, even like entries anywhere here in this range. Done. And now things are starting to get a little crazy. People are like speculating, you know. So it's very simple when it comes down to that. But in a classical sense, technical analysis, we close multiple candles on 2 hours below, and it's likely, even if it pushes up a little bit, there's a good chance that it's going to reverse. Otherwise, we will wait and see how effective the classical legacy technical analysis is when you draw your patterns, which is pretty much the only aspect of technical analysis that is widely spread and shared, and everyone is using it. It's an accepted normal method of analyzing your chart patterns. You know, when you have volatility that dies off, you have a little retest, you know, but ultimately we're going to get a spill or a pump. But to me, a pump is less likely because we have been pumping for a little while. If you look at this range, expect the same here. Why would it be any different from this? You know, or from the bottom of this consolidation here? It only makes sense. So do we have an immediate trade right now? No. Simple as that. People want to hear like there has to be a trade. We have to get in now. Saturday. You had your two signals. Did you take those jackrabbits, two pyramids, reversals on the 15? How about the 31? How about the 30? All day long today, like small, tiny price action, but still profitable candles over here. Have your divergence coming out. There it is. There's the dip into the dragon skin. There's your reversal. And what do we talk about? The first reversal. There's the trade. From here to here. From here to here. 500 points. Done. 1x. Price goes up $500. 500 profit. Done. Done. There's your area capture. Otherwise, like, macro, what are we looking at here? Doesn't matter. Gotta wait now. You take a look at Ethereum, but I'm not trading it, so I won't be able to ride the boat with you. You're on your own there. But we can take a look at it. But yeah, the first 2 hours of the stream is what I wanted to get across. I hope you enjoyed it. If you want more, let me know. I want to do this every Saturday, maybe, if time allows, to just go over a few basics, a few reminders. A couple of reality checks here and there to help you stay sober, grounded. Because flashing lights imagination runs wild. The potential profits that you could be making that everyone else falls feeling, Discord. Share your failed setups if you have any. Always good to break them down, dissect them, look at them. Deep dive into the why and what. Rise against the culture of always being right, the need to prove something to somebody. Do this for yourself. Not for the man across the room that's taunting you. Telling you, show me what you got. Let's watch this together, this chart in particular, like this rising wedge. Look what it does. Look what it does. It broke out clearly. It wouldn't even be here. We didn't fit it. It broke down, closed, grinded against it. Started falling. Instant rejection. Now it's looking like it's going up. Is it going to make it back inside? I'm curious. I'm just gonna sit here and watch it. Our stop is right here. Our trade is in. And we want to see good rejection, lower high, and we want to see a continuation before deciding that, yeah, this is indeed a short. Well, momentum is limping a little bit already. It's taking hits. There's a couple of damaging points over here. The shell is cracked. Diverging for sure on higher time frames, lower time frames. Let's see what happens. Let's see how good these things are in terms of probabilities. Do they actually add anything to your technical analysis? Horizontals, diagonals. Let's see. And then once we get a setup, if we get a setup within the next hour or so, 30 minutes max, 20 minutes, that's all I can last. 20 minutes and I'm out. It's 4:10 right now. Nighttime. But we'll see if MarketSpy prints one. Don't need any patterns. We'll see weakness, and then we can add to it. But I expect this to keep consolidating for a long while now at this level. Like weekend, a couple of days, you know. However, remember the golden rule of Bitcoin is the more expensive it is, the more desired it is. Been drilling that since day one. So I don't see a max 7 at all. There's no max 7. There's no confluence here. The red started over here. We don't see any breaks that are synchronized. Nothing. We don't see anything on VVS. Lower time frames are up and down, up and down, up and down. Those ATR values, you're hitting those. Otherwise, it doesn't really matter. Why does it matter if they're turning up? We have, what are we trying to establish here? Macro, intraday, or like get in now, get out 5 minutes later kind of trade, you know? Once we see it, we'll know exactly what to do. Until then, when your mind starts to, but it's doing this, it's doing that, you want to be in the market, trading levels and trends. Not like, even in this consolidation, right? The range top over here, the range bottom is over here. We just had a bounce. Okay, so short setup probably over here, right? And the next buying area is again down here. If that's, we're establishing a range here. Could it be a speakerphone here? Also, yeah, it's consolidating, but like closer to here, short, long. So that's your lower time frames, though, you know? And they're performing as expected. They're not noisy. It's just that their distance to target is a couple of hours and it's moved by 300 points, but it made the target, made the distance. Your entry right here is in the middle of nowhere, right here. There it is. Entry here, better. Shorting around here, better. Right now, right here, nothing. And like, look how it looks on higher time frames. One candle that's still working its way up. There's nothing here right now. I'm curious about this wedge. We started talking about this. It's very important because that's your core technical analysis. There's nothing else. Like if this was resistance, we came back down to retest it. Don't make me laugh, Bitcoin. You're trying to make me look like, go ahead and long me. I'm looking at this volume over here. I'm not convinced. You can post as many green candles as you like, but you've been pumping. You know what that means? I know what that means. You've been pumping. But the show must go on. And it also has to end sometime, right? We'll take a break. Break. When I started in November with MS, I did not know it takes so much time for one trade to make money. How about now? What do you feel? Do you feel like there has to be a better way? Like the spontaneous, phony crypto face kind of trade when it's like, it seems like anytime there's always a positive trade, a multi-million-dollar trade. I don't know. Yes, it takes time. It takes time. So, yeah, very important to also do something. Right now, I'm simulating my own sort of approach to trading, trying to find a setup. This is what I'm looking at, and I have a plan, and it's shaping up in my mind. It's shaping up. And the conviction right now is that this setup in particular tells us that we're due to go lower. And that is going to be complete and valid and will warrant a short if within the next few candles here. I said 30 minutes, like if this candle does not go back in here and we resume the momentum, then yeah, this is pretty much confirmed and we're going lower. I know there are like 3 flags over here. I know this is one of those classic Bitcoin 45-degree angle trades. The only problem is that this candle already took out all. Remember, we always talk about this. Do we not talk about this? We always talk about this, that any attempt, like once we have a pump and it's not consolidating straight or down and it starts going this way, we have one swift candle that takes it all. That's the baseline trampoline dragon skin play that we're looking for. That right there. Now I would argue that it started from this candle here down to here, and is now rebounding. But that's what you're looking for. You see this? Those are the greed candles. Your ATR values become very important here, because it loses power as it keeps going up. It loses power, and eventually the sellers will step in and you'll go, whoa, how did that happen? Well, you just let it drop here without pushing it here. So now we're going to compensate for that incompetent trading that the market, that's retail right there pushing the price up right now. 100%. We had a good consolidation. We had a 38K level. Before that, we had 30K level to buy. And now we're at the literal top. We're thinking, but what if it goes to 60K? No, it won't. It's not going to 60K. Everyone's singing like 100 by next year. Da, 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 da. No. And right now on this particular setup, it's only a matter of time. Take the weekend. Go crazy. Do it on Sunday. Give me one more pump. Fail miserably. We're still going to come back down to that blue box from below. Watch. It's the same story every summer. Actually, it's the same story every day. Well, Mr. Rembrandt, I'm really happy to hear that. That's, I guess that's one way to compare it to the golden egg, the golden goose. But it is. I don't see how in this retail space trading view format that we have right now, and there's so many attempts, that there's a way for that really hard, rule-based, consistent, because everyone's like, it's it could go, you have to consider. But then with MarketSpy, you have strategies and how you execute them. That's just total liberty, right? Like your risk has to be measured, executed the way you want to. Follow the guides that we talk about here. But once you find that setup, take it and trade it. I guarantee you will make money. Not a financial advice. It's a setup, trade plan advice. That's how you can do it with MarketSpy. I Platoon, I'm telling you trade guidance, and I'm giving you like these trades that have MarketSpy elements in them pre-programmed. When we go in, we say, last 5 trades are all profitable. We talked about how we're gonna get there, right? Every live stream, go back and check it out. The beginning of the stream and the end. The chart that we start with, the chart that we end up with, and how we transition to the next day. But for MarketSpys, if you follow the strategies like I do, every day you have an opportunity. Take it. $300 candle, take it. Trade 5 times a day. $50 profit, $100 profit each. Right? Stack them up. Take a little loss here and there. A good measure, And you're good, and step away from it. Every day you should have a profitable trade setup. I look at the charts, I open MarketSpy, and I see signals that perform, signals that are hitting it. I throw in an ATR band and I see that it's met the target every time. Just keep in mind where we are in relation to the EQ zones, please. And understand, have we pumped where the short signal is occurring? Or have we been dumping and now the short signal is occurring? Like, there's a big difference, right? We've been dumping for a while and you're getting a short signal. No, you're looking for a long now. You're skipping that. You're waiting for the long signal. baseline reclaims, right? Your first sign. I mean, you literally see the green and the red on the charts. That's it. There's nothing else. And it's not like we have green, red, green, red. We have like straight lines of green, straight lines of red on those baselines, on those candles, with a couple of pyramids preceding that, a couple of red dots and mag 7s preceding that. Momentum, long-term trend flow telling you like, yeah, we're going down. Be part of that, you know? I'm not gonna call and say, MarketSpy has a signal, everybody. Let's go trade that. Let's go. I mean, I don't have that kind of time. I wish I could, but then what would be the point? Now you guys can do the same. You can go to the Discord and say, hey, there's a setup that's setting up right now. I see it. As strategic, according to the boot camps, we have a strategy. We have a dragon skin play. Do you guys see it? Because if not, I'm letting you know there's a trade. Want to take it? You're welcome. Make a lot of people happy. For some of us, we can't. It's a discretionary trading system. It's not like you get a signal and you jump on it. A couple of things, right, happening at the same time. You gotta recognize it. You gotta scan your charts, find one, and say, here it is. In case you didn't notice. Sometimes I don't notice. I end up missing those trades. Fine. There we go. Okay, last one thing before we wrap it up, just because of, you know what, I'm gonna start our next basically batch of streams are going to be happening, whatever the time is right now on your end, is going to be happening 4 hours from now. So basically a little bit later into the day. I think it'll be better for everyone. Now here's one last tip: how to average in without increasing your risk but increasing the number of your contracts. So on this example in today's stream that we took the risk pane, we multiplied, we did some alchemy, some magic here, and we came up with this number where we have the stop loss set, right? And we came up with these parameters that our profit would be about 100, 2-to-1 risk reward ratio. Then, so 2 triple R risk reward ratio is at 2. And the contracts to trade, the number is 1737. So 47 in this case. So how can we actually increase the number of contracts while maintaining the risk profile here? Let's assume that this thing is going to be going up from here to the stop loss. So that's 982 points, about there, 982. Go to the ladder over here and say that the distance would be $982. That's the ATR range. Okay. $982. Okay, and that brings us up to our stop loss is the same. Get rid of this. $100. So take a look at this. So if we go and put a stop loss to about here, the same as on our limit. So we just copied this stop loss to the ladder. And we want 982. This is the distance from where the price is now all the way up to our stop loss. We want to add this number, and limit take profit will be sitting at 4678. Or actually, that's just 4600, right? That was our. But in here, we have these parameters right here. So, if we go and preview the short, we have an average of 44260, which brings the price over to somewhere around here. Okay. So it shows us here that we can trade with 3,339 contracts if we don't want our loss to exceed about $50. Okay. Currently we have 1,737. So we can actually add this number of contracts. Fill plus 1737. It makes it about 5,000. Okay. Now 5,000 will bring it to roughly about like this size. Now this is it's not actually going to be this, but sorry, my bad. We're going to bring this back to 0.1 risk fill, and this is the number. We have 1737. So 1737 is about half of this. So if we add this all the way up to here, we'll bring the number of contracts to this plus this number. So roughly that's going to yeah, it's about, let's just round it off, 5,000. And that's going to increase percentage to about this number right here. So we can actually now add these and bring the average entry price to here, and the stop loss is going to be sitting at here. This is a little off. It's still going to be $50, just because the number of the distance here is calculated the way it is calculated. It's not really. And so the stop loss here is the same, but because it's a market order, you're going to be paying a little slight fee there, about $5 or so, maybe less than that. But it's going to average this out, bring the contract size up to here. This is not precise, you'll have to actually calculate it, but roughly you know that you're still within the risk limit, and knowing that your entry would be somewhere around here and stop around here, your number of contracts is going to go up. I don't know why, for some reason it's showing how's it calculating the entry right here? Wait a second. Four, 2, 8, 3. Yeah, $300 distance is not going to result in $78 loss. Anyway, something is off here, but it's still going to be within the 50 range that you originally start, where you have more contracts. So if this thing goes up, even when the stop loss gets hit, we're still going to have more contracts than possible shorting it from here if it goes up. Otherwise, we're keeping it at this number as is. But when it starts to go up, it'll average out. You'll get 5,000 contracts. Do it properly, like this. Fill. And this number is going to get added to the 982 distance. There it is. The number of contracts, let's say if our entry was this number right here, copy, go to limit and simulate that, and we'll say the entry would be right here. 0.5. And there we go, 0.1%. Check it out. Loss if stopped out. Still, the risk parameter is at 55. Number of contracts 7,698. Okay, but we can't do it here on the limit. We're adding it on the ladder. In our case, it brings it up to 5. Like I said, these calculations are a little bit off. This is the average price, but it's actually going to be a little lower because we already have 1,737 in here. So it's actually going to be a little lower. This is showing us the preview price of these contracts purely, without considering the 1737. Maybe we'll have to make an adjustment in Bybit Pro so that it calculates and takes into the account the open yeah, we can do that. So it calculates the existing number of contracts that are open. So in that case, here it is. This is the simulated average price of where we would be. And right here is showing us that the loss is not going to exceed around $50. The number of contracts here is 7667, but in actuality, the true number would be 5,000 something. And the entry is going to be slightly lower than what the ladder is showing us. So if you can grasp this concept of averaging in and understanding that how to add your contracts to the actual open position, and what would be, how would the stop react? So instead of like holding it here, you want to say like, let's say this thing goes up slightly up to here, but doesn't hit the stop loss, right? And it picks up this number of contracts, starts trending down, then you just picked up a whole bunch of contracts that are going to be way more profitable. Way more profitable. And because of that, obviously you're looking to, and the stop loss is still going to be very tight. So it's kind of going to average it out and give you a very tight entry, no matter what. So that's one way you can contain your risk without exceeding it in terms of contract, while at the same time giving it that, this is why we only use like 0.1 leverage when we're going for like very aggressive dips. And we keep adding to it sometime $1,000, $2,000 distance average. And we up the leverage to like 3x, but not by choice. It's by design of how the averaging works. And so we end up with 3x, but we never aim to have 3x. But sometimes the market just gives you that, and that's great because now you have a great average, a very solid position, and you need a shorter distance in terms of ATR to make that same profit that you would with a smaller position size and a greater distance that's needed to achieve that 1% a day. If that's your mark, I don't know. You could be aiming for 5. I see people going with like 28% of their account in one shot. Incredible, of course, but that's how you would do it. Okay, and it's a process. You have to sit and fiddle with it. The only thing you don't fiddle with is once you determine your stop loss and your entry, you don't start closing, opening. Now this thing can go up, can go down, sideways, and circles around, and do all sorts of nasty stuff. But you don't play with it because you're fully protected. You know exactly what you want out of life. You know exactly what level you want to hit with that position, and you don't touch it. If it goes to about midway here, starts to go sideways, prints like 5 candles in a row, and one starts to reverse and top the other 5 candles, yeah, take profit, market close that position, is done, right? It's not going to lower, reevaluate, and see if you can average in and get it in the second time around. So it's a very, very solid approach to managing your risk, at the same time balancing that sweet spot for the number of contracts that you want to deal with, and of course your take profit distance and stop loss. Stop loss will determine, as you can see, that the tighter the stop loss, the more contracts you can trade, the more leverage that you can play with. Not need, but can allow yourself to play with. You know, you can find an entry that instantly reverses and you have a distance like $2 stop loss. Throw 1 million contracts in, off you go. Very rare, but it happens. VR customs, yeah, I know. We can't. I think it's a good time, but then the streams are always available for later. We'll try a new format. Been going on for a while, but my friends stateside are complaining. Some of them got work in the morning and they just it's not happening. I'm gonna come back evening time. Do it nice and easy, slowly. No rush. Bobby B, so first average out attempt is double of original entry? No, never. Never. It's just according to like this specific distance to the stop loss. That's what it comes out to. It'll be different every time depending on like where you are, where you're considering your entry. So right now, so far, this pattern paired with momentum is working in our favor in the expectations that this will go down. So let's keep it as is, and I'll report back in the morning to you guys and tell you how it went, because I'm really curious to, even though this is not a for sure tradable area for me personally, I feel like you learn something new every day too yourself, no matter your experience level. There's always something new in the market, and it's good to just observe this animal, its behavior every once in a while, just to see, like, in case next time I see a wedge like this, I know what to expect from it. So let's see how it does. As you can see on 8 hours, it's not even there, the joke. But on lower time frames, up to 1 hour, it's there, right? So let's see, do an experiment with me and see. We'll follow up on this tomorrow, Sunday. Weekend streams are going to be like I said, allow me to freestyle my way through this, and I don't really want to commit to it too much. But today, what I wanted to get across, I think I got it across. First hour and a half of this stream is where it's at. The other half, we're just kind of relaxing and sitting in the grass here, ready to pounce. But we understand we need to wait a little bit. So the point of this experiment here is to see whether this wedge was actually a breakdown, a retest, and how momentum will carry us through to reach that target at 4,600. But that's a buy area down there, and if we're going down there, we have no choice but to put a stop loss at the yellow marker right there and watch this thing bleed out all the way down to those target areas, with lots of volatility on the way. You can see that the market is telling you, look, I can get pretty violent, $1,000 up, $1,000 down within a time frame of like 5 minutes of each other. So that means we shouldn't be freaking out, and all your tight stop losses are going to get eaten. So the market is not allowing us to leverage up here, because why? Not the bottom, and it's definitely not the top, but it's getting there, So we're also kind of testing it a little bit, teasing it. It's teasing us, we're teasing it. We're throwing a few contracts, say, okay, you want to play, you want to go down, yeah, $50. That's my bet. If I lose, the market wins. Cool. That means there's still room to grow. Room to grow means we'll come back to this by Monday and evaluate it then. And it lines up with our previous stream analysis where we said that we're going to be in the mid 40s, and arguably we're kind of there right now, but at the same time not really. We can have another 3K pump or so over the weekend, and that would be totally fine. But that's when we really start thinking about shorts, at that point, if not now. But right now, we have a small setup and we want to see if the lower time frames can influence higher time frames, and higher time frames lag. And by the time we get a signal on higher time frames, it would already be time to buy because lower time frames would be extremely oversold. That makes sense? So join me on this experiment. Let's come back to this tomorrow and see what happens. And happy trading. Thank you for tuning in. This was a stream on stealth trading, talking about Bybit and the people and groups that it is in cahoots with, and where we stand as traders, and how can we better understand risk and blend in with the market without sticking like a sore thumb in the middle of an open battlefield. Yeah, first half of the stream. If you're just coming in now, I recommend you go back and rewind. Enjoy it, and I'll leave you on that note for now. See you guys tomorrow. Platoon, be well. See you tomorrow.